Asian shares go through painful sector. Dollar in rude health. Sydney Asian shares have been ending a hard quarter in a somber temper on Thursday amid fears crucial banks' treatment for inflation will come to be sickening the worldwide economic system, even though it is proving to be a fillip for the safe haven greenback and authorities' bonds. As policy makers reiterated their dedication to controlling inflation irrespective of what pain it induced, information on U.S. center expenses later in the session must only underline the volume of the mission. Inflation may be sticky, warned analysts at ANZ. It is broadening from items to services and wage growth is accelerating. Even with rapid price rises, it'll take time for tightness in labor markets to unwind, and that means inflation can continue to be better for longer. That indicates it's far too early to choose a height for hobby fees or a backside for stocks, even though markets have already fallen an extended way. The S&P 500 has lost nearly 16% this area, its worst overall performance for the reason that very begin of the pandemic, at the same time as the Nasdaq is off an eye-watering 21%. On Thursday, S&P 500 futures and Nasdaq futures had been each down 0.4% with little sign as yet that the new quarter will deliver in courageous good deal hunters. EUROSTOXX 50 futures and FTSE futures each fell 0.5%. MSCI's broadest index of Asia-Pacific stocks out of doors Japan eased every other 0.5%, bringing its losses for the region to 10%. Japan's Nikkei fell 1.4%, even though its drop this sector has been a relatively modest 5% thanks to a vulnerable yen and the Bank of Japan's dogged dedication to super-easy policies. The want for stimulus turned into underscored through records showing Japanese industrial output dived 7.2% in May, when analysts had looked for a dip of solely 0.3%. Chinese blue chips brought 1.6% help through a survey displaying a marked select up in services pastime. Analysts at J.P. Morgan (NYSE), JPM anticipate a major rebound in China in coming months and felt that, with so much horrific news priced into international markets, positioning argued for a bounce. It isn't always that we suppose that the sector and economies are in awesome shape, but simply that a mean investor expects an economic disaster, and if that doesn't materialize, unstable asset instructions could get better maximum in their losses from the first half of, they wrote in a note. Dollar in demand for now, the hazard of recession turned into enough to deliver U.S. 10-year yields lower back to 3.10% from their latest top at 3.498%, even though this is nonetheless up 77 foundation factors for the zone. The yield curve has continued to flatten, and turn terrible in the 3 to 7 year variety, whilst futures are nearly fully priced for any other Federal Reserve hike of 75 foundation points in July. The Fed's hawkishness has combined with an investor desire for liquidity in hard instances and gifted the U.S. greenback its great sector for the reason that late 2016. The dollar index turned into trading up at 105.100 and only a whisker from its recent two-decade height of 105.79. The euro changed into suffering at $1.0452, having shed 5.6% for the sector thus far, although it stays just above the May trough of $1.0348. It additionally dropped to a sparkling 71 two-year low versus the Swiss franc at 0.99663 francs. The Japanese yen is in even worse shape, with the dollar having gained more than 12% this region to 136.50 and hitting its highest considering 1998. Rising interest fees and an excessive dollar have not been true for non-yielding gold, which changed into CAD at $1,816 an oz. Having lost 6% for the area. GOL. Oil prices had been flat on Thursday amid concerns about an unseasonable slowdown in U.S. gasoline call for, while global elements continue to be tight. OPEC and OPEC Plus ceased 2 days of conferences on Thursday with little expectation they may be able to pump plenty extra oil regardless of U.S. strain to expand quotas. September Brent rose 17 cents to $112.62 a barrel, while U.S. crude introduced 7 cents to $109.85.